We're going to jump over to our man Teddy Kekstadt. Folks, if you haven't checked out Teddy's outstanding Tiger Forex Report, head on over and check it out right now under the newsletter tab, right at TFNN.com. You can subscribe. It's only $97 a month, and it comes with a 30-day money-back guarantee. Check it out, folks. No risk, all reward there. Teddy Kekstadt, good morning.
Good morning, Tommy.
So we got quite a market across the board here, and we got an important day with Fed Day. And what are you watching in this market, Teddy? We could start in many areas, but what are we watching on Fed Day?
It's Fed Day, so not very much.
Right.
Especially after a couple hours from now, it's going to really dry up until the 1:15 mark when when the meeting ends. So my expectations aren't very much out of this meeting. So I mean the one thing that would be, I would think, if they're going to do any easing over the next, say, 4 to 6 months, since there isn't a meeting until May, it might be a good idea to do a quarter point cut today. I don't see it happening, but it probably would be one of the smarter things to do, and then see what happens because then you have, no matter what, 2 months where they're not meeting anyhow. So, and see how that impacts the market, and see, we have a lot of good numbers that have come out, and we also have numbers that are just the opposite. So I would think that would be that would be really healthy for us as traders and for the economy and for the market. I don't believe that's what they're going to do. So I think once they have the meetings over, trade will resume tomorrow. I see a little bit of dollar strength in the short run right now. So obviously it's coming out today. I mean, the main reason is we've been pretty much sideways riding the lows, and we're due for a little correction. I'm not saying that there's going to be a lot of dollar strength, but I think that it's really going to come down to if there isn't a rate cut, okay, then I think you're going to probably see a nice, especially extended leg higher. Then I think you're going to see a rally in the dollar. So if they do cut today, then you may see a little spike high rally today, and then see the market start to pound the lows a little bit going into the rest of the week, into the weekend. Yeah. But like I said, I don't really think they're going to make that move. So, but I think that there's a good chance for dollar strength to come in for at least, I would say, a week or two. I think that as far as like pushing the odds of pushing our lows right now, even if we were to sell off, I don't see us having that drastic of a sell-off. And here's my key reasoning why on that one, is that let's say that we don't have a rate cut. The U.S. dollar-yen relationship, that's in a nice correction. Okay, so if that extends, as well as you have the weakness in the Australian dollar and the New Zealand, if that returns especially, remember we had before, where a couple months ago I said we were having divergence now in the currencies, where the dollar index is going to become a very hard guide as far as where the broad basic currencies are going. And I think that some of that divergence that we've been experiencing over the past couple of months is going to stop for about probably a month or two, into basically, I would think, the next Fed meeting after today. So I think you could see a nice little trend, which if we do get a rally going on, and start trading higher in the dollar index, that means you're going to see dollar strength across the board against most currencies, which could very likely happen just because, there's, once again, this gets back to my whole thing, is the dollar strength is no longer so much because of what's going on here. It's about what's going on in these other countries. So, and that's reflective of how beaten down the Aussie and the New Zealand have been. And they've had a nice little bounce, and that's just all it was a corrective rally. And now they're starting to get weak again. And if that accelerates, like I said, and also with the pound too, it's had a nice rally going on. I think that's coming to an end as well. As far as for the UK, they have a lot of issues that it's going to impact their currency over the next couple of months, and the same with the same thing with the euro as well. And that's where I'm not a dollar bull per se. I just think that I'm very negative most of the other economies around the world, and unless I see some sort of big turnaround where they start to shore up things, and especially like I could see especially the EU start another wave of quantitative easing, And if they start doing that, that's really going to crush their economy. So we'll see what happens. I don't have a crystal ball. I can't predict what other nations are going to do, but especially considering the way they seem to be trending right now, and the voicing that I'm hearing, the narrative that's going on, that seems to be the direction they're going to head in. And if that's the case, you have to use that. Those fundamental factors become a big part of the currency trends. And I do believe that we are going to have trends, but they're not going to start until this summer. And then we're going to start to see some real movement in these currencies, whether it's, against the dollar or it helps the dollar. You know what I mean? We'll find out then. So, and then, I think like crude too, like interestingly enough, yields have been slightly lower to sideways, while crude has been sideways to lower, and that definitely helped the U.S. dollar yen trade for a while. But now you've had a nice spike high, like we hit the we went back to our one target level that was a big key area at 150 in the yen, which is also the critical level for the BOJ, and spiking high on that today. That's going against where it should be going right now. It should, so we'll see what happens with that. It's just because it technically should be going back towards where the lows are, not going back to this. So if this is just a correction, it should stop. If that doesn't stop, the yen is one of the major currencies in the dollar index. So if that gets back, let's say the yen gets back up to 153, 154, or even 155 as an extreme, okay? And then you also have the Aussie and the New Zealand. Let's say they just go back to their lows, okay? Unless the euro and the pound have some excessive rally against the dollar, being positive, their currencies, I see the dollar, then you're going to see a nice trend in the dollar index, where you could see, like right now, the dollar index has been bouncing around our downside target level. We could get back up to the 105 even area, that's a nice little correction for the dollar. I mean, you got to remember, the dollar has been trading lower since the first, the second week in January. So, and right now we're riding the lows. So I'm not trying, I'm not trying to pick a bottom here. But, I said this already last week, that we're due for a corrective rally, to the upside, So, and that's not, like I said, not being positive dollar. It's just a technical thing. It just normally happens. We're really pushing. Once again, the odds of us pushing the lows right now are just really nothing. There's nothing there to really push that unless some new, something new comes out in the news, some new fundamental, right? So
sure. And then crude, $66. I tell you what, we're coming to a break. Can you hang with us for one more segment?
Sure.
All right. Welcome back, folks. You got markets accelerating a bit to the upside. S&P's up by 33 now. We're above 5,700 at 5,702. NASDAQ 100, we're up by about 0.6%, 19,833. And we're talking to our man, Teddy Kekstadt. And that was great takes, Teddy. And I wanted to jump into crude oil a bit. And I love how you compare the currencies, because it's interesting. You come from equities, of course, but currencies, it's always great, because I'm always looking at the dollar, and I love the way you wrap your brain around it in terms of it's not always just about the dollar. It's about the dollar compared to every other currency, because that's how currencies trade in terms of pairings, which is so cool. And crude ties into that. I find myself looking at crude a lot. We've been talking about it. It seems like we got our back really against the wall here, man. I put it up technically, as a trader, a short-term trader, sometimes swing trader. I like these trades when you get your back against the wall. Crude trading at $66. What do you think about the action? I know you got it potentially in a little bit of a corrective rally. I always check out the Tiger Forex Report. But boy, if I'm looking at this thing, how do you trade below this level when, boy, you got some technical support here, and we're talking about relatively cheap prices? What do you think of crude at right now, 66.66 as I talk?
Well, you know what, to be quite honest with you, I liked the spike high yesterday. I think that's a key level. I liked it. Is like if we hold a trade below that high, I think we're going to actually trend lower. And I see oil being around $3 lower by Easter. So if not beforehand. So now I'm not looking for an excessive sell-off, but I'm saying I think probably with the way this trend has been snaking along, unless we can get, if we can get above yesterday's high and especially close above that and sustain a trade above that, well then maybe we get a correction that maybe pushes 70, but I don't see it getting above 70 by any means. I think even if we hit 70, then you're going to see a lot of selling I think that would just be a profit-taking area. But like I said, I don't even think we're going to get there. I think yesterday's high hit the mark, and we're going to trend lower to 60.
And that was quite a trade lower yesterday, man. 68.50, folks. That high yesterday. Teddy, thank you so much, man. So much great information. Look forward to talking to you next week. Have a great week, man.
Take care.